As we move deeper into 2025, the global economic landscape finds itself at a pivotal crossroads. The warning lights are flashing, signaling a period of heightened uncertainty and volatility. From mounting trade tensions between the world's largest economies to the sweeping reforms in cryptocurrency regulation, every investor, policymaker, and ordinary citizen faces pressing questions. Are we on the cusp of an economic crash? And in the face of such turmoil, can cryptocurrencies offer any semblance of safety? Let's begin with the broader economic picture. According to the United Nations Conference on Trade and Development, global economic growth is projected to slow to just 2.3% in 2025. This downturn, compared to the 2.8% growth seen in 2024, marks a significant deceleration. The root cause is clear: escalating trade tensions, especially the latest round of tariffs introduced by the United States administration. These policy decisions have introduced a level of uncertainty that is rippling across international markets. Nowhere is this uncertainty more evident than in the United States. The so-called Liberation Day tariffs, broad, sweeping levies aimed at a range of imports, have sent shockwaves through financial markets. Within mere hours of the announcement, major stock indices plummeted. The S&P 500, a bellwether for American equities, saw a dramatic 4.5% drop. This was not just a market overreaction. It was a real-time recalibration of expectations for U.S. growth and profitability. Economists and analysts have responded by revising their forecasts. Some now predict that U.S. GDP growth for 2025 may be limited to a mere 1%. Others, more pessimistically, see a contraction of up to 3.7% in the first quarter alone. These estimates underscore how quickly sentiment can shift and how deeply intertwined the global economy has become. The specter of recession, once a distant concern, now feels all too plausible. But it's not just the traditional financial sector that's feeling the heat. The ripple effects of these policies are reaching into the world of digital assets. In a bid to bring some order to the chaos, the United States government has enacted a landmark piece of legislation, the Guiding and Establishing National Innovation for U.S. Stablecoins Act, known as the Genius Act. Signed into law on July 18, 2025, the Genius Act sets out a comprehensive regulatory framework for stablecoins, those cryptocurrencies designed to maintain a stable value by being pegged to fiat currencies or low-risk assets. The new law mandates that stablecoins must be backed one-for-one by U.S. dollars or similarly secure assets, and it imposes strict transparency and consumer protection requirements. This move is intended to bolster confidence in the digital asset market, providing a backstop against the kind of volatility that has plagued the sector in the past. At the same time, the U.S. government has launched an unprecedented initiative, the Strategic Bitcoin Reserve. For the first time, a major government is not only recognizing but actively participating in the digital asset class. The reserve, which will initially hold Bitcoin, Ripple, XRP, Solana, SOL, and Cardano, ADA, is intended as both a hedge against future economic shocks and a statement of support for the evolving crypto industry. The first purchases are expected to take place in early 2026, signaling a significant shift in how digital assets are viewed at the highest levels of policymaking. All of these developments point to a period of transformation. The global economy is slowing, the rules of international trade are being rewritten, and the role of cryptocurrencies is being fundamentally redefined. So what does this mean for you? What predictions should you keep in mind as you navigate the months ahead? The first and perhaps most important prediction is that volatility will remain the norm. With growth slowing and trade tensions persisting, markets are likely to experience sharp swings, both up and down. Investors should prepare for choppy waters, with sudden drops followed by equally rapid recoveries. This is not the time to expect stability from traditional assets alone. Second, policy uncertainty will continue to weigh on sentiment. As governments respond to changing economic conditions and political pressures, new regulations and interventions are likely. The recent tariffs are just one example of how quickly the rules of the game can change, with profound effects on everything from supply chains to consumer prices. Third, the role of cryptocurrencies and digital assets is set for rapid evolution. The Genius Act, by establishing clear rules for stablecoins, may provide a foundation for broader adoption and acceptance. The creation of the Strategic Bitcoin Reserve is a powerful signal that digital assets are moving from the fringes to the mainstream of global finance. But with opportunity comes risk. The crypto sector remains exposed to the same forces roiling traditional markets, namely uncertainty, speculation, and the potential for sharp corrections. As regulators move to tighten oversight, there is also the risk of unintended consequences, stifling innovation or creating bottlenecks that slow the sector's growth. For those seeking safety in the storm, diversification remains as relevant as ever. In an environment where no asset class is immune to shocks, spreading exposure across stocks, bonds, commodities, and digital assets can help cushion the blow of sudden downturns. Within the crypto space, prioritizing assets with strong regulatory backing, such as stablecoins compliant with the Genius Act, may offer an additional layer of protection. It's also worth noting that the strategic accumulation of cryptocurrencies by governments and institutions could serve as a stabilizing force. By signaling long-term confidence in digital assets, these moves may help dampen some of the wild price swings that have characterized the sector's early years. However, this is by no means a guarantee. The integration of crypto into the mainstream financial system brings new risks, including the potential for coordinated selling or policy-driven shocks. Looking ahead, the interplay between policy, technology, and market sentiment will shape the path forward. If trade tensions escalate further, leading to more aggressive tit-for-tat measures, the risk of a full-blown economic crash grows. In such a scenario, both traditional and digital markets could face simultaneous pressures, testing the resilience of even the most robust portfolios. On the other hand, if policymakers manage to navigate these challenges by fostering dialogue, minimizing disruptive interventions, and supporting innovation, the foundation could be laid for a more stable and inclusive recovery. The Genius Act and the Strategic Bitcoin Reserve are steps in this direction, but much depends on implementation and ongoing cooperation between governments, industry, and the broader public. For everyday investors and savers, the message is clear: stay informed, remain adaptable, and be prepared for rapid change. The headlines may be dominated by talk of crashes and crises, but within every period of upheaval lies the potential for renewal and growth. In practical terms, this means paying close attention to the evolution of regulatory frameworks. The Genius Act is likely to be just the first of many new laws and guidelines governing digital assets. Those who understand these changes and position themselves accordingly will be better equipped to weather the storm. It also means reassessing risk tolerance and time horizons. In uncertain times, short-term speculation becomes even riskier, while long-term, disciplined investing in well-regulated assets takes on greater importance. For those with exposure to cryptocurrencies, this may mean favoring established coins and tokens with clear use cases and regulatory support. Beyond the markets, there are broader societal implications to consider. The growing adoption of digital assets by governments, institutions, and individuals alike raises important questions about privacy, security, and the democratization of finance. As we move toward a future where digital and traditional assets coexist and intermingle, the choices made today will shape the financial landscape for years to come. In conclusion, the remainder of 2025 and the years that follow will be defined by complexity and change. The economic slowdown, driven by trade tensions and shifting policies, poses real risks to global stability. At the same time, the rapid evolution of cryptocurrency regulation and adoption offers both challenges and opportunities. The key predictions you need to know are these. Expect continued volatility and policy-driven market shifts. Watch carefully as the U.S. and other governments reshape the regulatory environment for digital assets. And above all, recognize that the line between danger and opportunity is thinner than ever. Whether you're a seasoned investor, a newcomer to crypto, or simply someone trying to make sense of a rapidly changing world, vigilance and adaptability will be your greatest allies. The story of 2025 is still being written, and those who stay informed and prepared will be best positioned not just to survive, but to thrive in the years ahead.